capital that we as AIFC would like to facilitate coming into the region is a private equity that is focused on infrastructure. So it's my pleasure to introduce Jad Ellawn, the managing partner and head of Middle East for Brookfield Asset Management, one of the largest private equity asset managers focused on infrastructure globally. Jad, I would congratulate you with your debut on scene of Astana and Astana Finance Days. Would like to hear from your view as a global asset manager on infrastructure projects. And of course, if you can a little bit elaborate what brings you to Kazakhstan and to this region, that would be really interesting for the audience. Thanks.
Absolutely. And look, thank you for having me here, and congratulations to yourself and to His Excellency, the Deputy Prime Minister, and everything that you're achieving both here within the AIFC, but also within the country. So my name is Jad Ellawn. I look after Brookfield in a number of regions, the biggest one being the Middle East for us. And for those of you who might not be familiar with Brookfield, we're a $1 trillion alternative asset manager, and alternatives being real estate, infrastructure, renewable and energy transition, private equity, and credit. And across the spectrum, we always evaluate regions at the cusp of when we think is the right time to start investing. And a very big example of that is the Middle East, where we started our business just 7 years ago, but today have invested over $15 billion, making us the largest foreign investor in the GCC today with a number of partners. Now, I've heard a number of times, throughout my stay here, and this is only one of a few times that I've been here. We started coming quite a while ago, and some of my colleagues have been coming for years. There's this perceived notion of difficulty of attracting capital, and so I thought maybe I could demystify that a little bit for everyone, as at least how Brookfield looks at investments in new geographies. And so the first thing I would say is there are three main criteria that we look for when we look at entering a new country or geography. And just to put this into perspective, we have over 35 offices globally already. And as you can imagine, for someone of our scale, all of those offices have investment professionals. We do not have an office which just focuses on capital raising. And so the three criteria that we very much focus on is, number one, rule of law; number two, respect for capital; and number three, the ability to scale. Those are probably the three most general parameters that we start off by looking at. And what I would say is, as we've visited Central Asia more and more, and particularly Kazakhstan, we're seeing all of those three tick the boxes. Now, when we say rule of law, we add to it respect for capital, because sometimes rule of law doesn't mean necessarily how strong is the legal framework. Sometimes you can be in places where the legal framework might be a little bit vague, but at the same time, you're in partnership with people or with governments where you feel that there is a respect for capital, meaning that you have an ability to solve very big problems with your partners outside of the legal framework. And if I were to tell you, quite frankly, at least as I run my business, we have yet to really go, I would say, head-to-head with anyone in a legal court. Having said that, the fact that the AIFC is now, or from the beginning, instituted a jurisdiction which is more familiar to those with common law is a very strong start to attracting foreign investment. And then as I think about respect for capital, I think it goes without saying, Samruk-Kazyna is probably one of the best examples of this in the country, in the region, but also in the world, in terms of how the standards to which they are running their institution. And that reflects very, very well upon the country. And also we've seen that in our various dialogues with members of the administration here, where you feel that the country is open to receiving and really willing, as we just heard, to be partners with investors such as ourselves. And so that gives us a degree of comfort, which I don't think many places in the world can provide. And then third, as I think of the ability to scale, I think it goes without saying. I mean, this is one of the largest countries globally geographically, which has a border with one of the largest populations globally. I think it goes without saying that this country is primed for an ability to scale. Now, those are three criteria in general that we look to institute. Now, what it all comes down to at the end of the day is the return that an investor can make somewhere on a risk-adjusted basis. And that will differ depending on where you are investing, the risks that are associated, but also, as I was discussing with Hussein just previously, the perceived of investing in certain areas. And what I would say from the beginning is if you look at an investor such as Brookfield, and we are, I would say, very different to a lot of our colleagues in the private equity space, the reason being that of the $1 trillion that we manage, half of that is actually our own. It's Brookfield Corporation capital, which means that we're our own largest investor. But the other $500 billion is coming from investors around the world. And the first thing you'll see managers globally say is we effectively act as agents for that capital. And so one of the ways to demystify this a lot of the times in growing economies, I don't tend to use emerging markets as a terminology. I like to call them growing economies or growth economies, is just to find that pocket of capital that is looking for that exposure. And Brookfield's funds invest on a global basis, but we started to recognize the ability to generate outsized returns in growth markets. And so in one of our largest global funds, which is our Brookfield Global Transition Fund, which is the largest of its kind, focused on renewables and on the energy transition story. Our first series was $15 billion. The second series today that is being raised is $22 billion. But what we did was we're in the process of raising another $7 billion, which is called the Catalytic Transition Fund. Now, the Catalytic Transition Fund is exactly what it is meant to do, which is that there is certain investors in that fund who act at a capped return as a catalyst for the rest of the investors. So 1 billion out of that 7 billion actually caps out at a 6% return and shares all the rest of the upside with the rest of the investors. When you start to provide investors that type of off the bat additional return, that can be very helpful for growth economies. And so we expect that that fund will be very active in not just Kazakhstan, Central Asia, but then also a lot of the other economies, which maybe today investors in the more, I would say, developed market fund are looking for. So I'll leave it at that.
Thanks, Jad. I think that was a very interesting overview, and quite an innovative approach. I think with the last fund you mentioned with the cap return, that's not what you really expect from a private equity fund, right? But fascinating, and I hope that your geography of your fund will include the Central Asia and, of course, Kazakhstan. Now I would like to